All right, so let's dive into this whole thing with the stock market. It's been kind of a roller coaster ride lately, wouldn't you say? Especially with all this talk about tariffs.
Yeah, definitely a lot of people trying to make sense of it all.
Exactly, and that's why we've got this great piece from the Motley Fool to kind of help us break it all down.
Yeah, those guys are pretty good at explaining investing stuff, in a way that everyone can understand.
For sure. So the S&P 500, I mean, that's basically like the benchmark for the stock market.
Right, like the all-star team.
Yeah, exactly. It hit that record high back in February and then bam, kind of took a nosedive.
Yeah, February was, well, it was a strange time, it seemed. Like everyone was wondering, is the economy amazing or is a recession coming?
A total head scratcher, right?
Yeah.
So the Motley Fool is pointing to a few things that are, kind of pushing and pulling on the market right now.
Okay, so what are they saying?
Well, on one hand, we've got all this talk about trade wars and tariffs, new tariffs on Canada, Mexico, China.
Oh, and I heard even the EU might be next.
It's enough to make your head spin.
Yeah, and the thing is, it's not like a one-way street either.
Right. It's not just us putting tariffs on them.
Exactly. Each country is hitting back with their own tariffs. So it becomes this like big game of tug of war.
A big economic tug of war. I like that.
And that's what makes it so fascinating, but also really unpredictable.
Totally. And on top of that, let's not forget about good old inflation.
Oh, yeah. That's already making everything more expensive.
Right. So you add these tariffs into the mix, and it really throws a wrench into the whole system.
I see what you're saying. It's like adding fuel to the fire.
Yeah, exactly. And, consumer spending actually dropped in January for the first time in ages.
Really? Wow.
Yeah, and consumer confidence took a hit, too.
Makes sense.
That's
I mean, if people aren't feeling good about the economy, they're not going to spend as much.
Exactly. It's a domino effect.
So where does all of this leave us? What's the Motley Fool saying?
Well, they lay out two possible paths for the stock market, based on what's happened in the past.
Okay, so path number one.
They're saying there's a chance for a rebound.
A rebound, huh?
Yeah, because historically, after a dip, like the 5% one we just saw, the S&P 500 tends to bounce back pretty quickly.
Oh, so they're saying this might just be a temporary thing.
Yeah, often within like 3 months.
But is it really that simple? Are we really just going to bounce back this time?
Right, history doesn't always repeat itself perfectly.
Exactly. I mean, remember all those economic worries we were just talking about?
Like inflation and the tariffs and consumer confidence.
If consumer spending stays weak, this could be a much bumpier ride than what we've seen in the past.
It feels like those tariffs are the big wild card in all of this.
Definitely agree with you there.
The Motley Fool actually compares the current situation to what happened back in 2018 when President Trump also put tariffs in place.
Oh, yeah, I remember that.
So back then, the average tax on things we import from other countries jumped to 3%.
And what happened to the market?
Well, the S&P 500 took a pretty big hit, almost 20%.
Wow, 20%. That's a huge drop.
Yeah, it really shows how sensitive the market can be to even small changes in trade policy.
Makes you wonder what's going to happen this time around.
Right, because the tariffs being talked about now could make that average tax jump to almost 14%.
14%. That's way more than 3%.
A much bigger jump for sure. But the market did recover from that 2018 drop.
Yeah. Yeah, eventually it did come back up.
So maybe history is on our side, even if it's going to be a bit of a bumpy ride.
It does highlight something really important that the Motley Fool pointed out. The market tends to overreact to both good and bad news.
Oh, yeah. I've definitely noticed that sometimes it's like the sky is falling and then the next day everything is fine.
It's almost like a kid in a candy store. Excited one minute, scared the next.
Totally unpredictable.
So we've got this tendency for the market to rebound historically.
Right, but then we also have these tariffs that could really mess things up.
And we can't forget that the market doesn't always make sense.
It's a lot to think about.
Definitely a lot to unpack here.
Yeah.
It really is a lot. And I think it shows how important it is to look beyond just the headlines.
Right, you got to dig a little deeper.
Exactly understand the nuances of what's really going on.
Totally. So for you, it's not just about like trying to avoid the risks, right?
No, not at all.
But also about spotting the opportunities that might come up.
Yeah.
Because of all this uncertainty.
It's like finding the calm in the eye of the storm.
I like that analogy.
It's easy to get caught up in those short-term ups and downs.
Oh, yeah, for sure.
And then you start making impulsive decisions.
Right. You got to think long term.
Exactly. Taking a step back, thinking about the bigger picture. That's what separates, the savvy investors from everyone else.
Being informed and strategic.
Exactly.
Now, the Motley Fool article didn't really dive into, specific sectors that might be hit harder or actually benefit from these tariffs. So I'm curious to hear your take on that.
That's a great point to bring up. It's important to remember that tariffs are basically taxes on imported goods.
Right.
So some industries are naturally going to feel the impact more than others.
Makes sense.
For example, companies that rely heavily on imported materials or components,
Mm-hmm.
for their products.
Got
They
it.
might see their costs go up, which could squeeze their profits.
Right, they'll have to raise prices.
Exactly. And that could lead to consumers, spending even less.
Like that domino effect we were talking about earlier.
Precisely. But on the flip side,
Now there's a flip side.
there could be some opportunities for domestic companies, the ones that compete with those imported goods.
Okay, so if those imported goods get more expensive because of the tariffs.
Right. Then suddenly those domestic companies have a competitive edge.
Interesting. So some companies might actually benefit from all of this.
Exactly. It's not all doom and gloom. There could be some silver linings out there.
So it sounds like there's a lot to unpack here for someone listening, trying to make sense of it all. Where should they even begin?
Well, I think the first step is to really understand your own personal investment goals and risk tolerance.
That's always a good starting point.
Yeah. Are you in it for the long haul or looking for some quick gains?
Right. Are you a risk taker or do you prefer to play it safe?
Exactly. Once you have a clear understanding of, your own investment philosophy, then you can start looking at specific companies and sectors that align with your goals.
It's all about having a plan.
And remember, investing isn't just about, picking stocks.
There's more to it than that.
It's about making informed decisions that are aligned with your overall financial plan.
So circling back to the Motley Fool article, they mentioned that the market tends to overreact to good and bad news.
Right.
How does that play into all of this?
Well, that's where things get really interesting. If the market tends to overreact, as the article suggests, is this current dip a buying opportunity, or is it a sign of even bigger trouble to come?
It's like that age-old question, is the glass half full or half empty?
Exactly. It depends on your perspective.
Mm-hmm.
And that's where careful analysis and a good understanding of, the underlying fundamentals comes in.
So how do you do that? What factors should you be weighing most heavily in making that decision?
That's a great question. And honestly, there's no one-size-fits-all answer. But I think a few key things to consider are the overall economic climate,
Yeah.
Interest rates, inflation,
Okay.
and of course the potential impact of these tariffs on specific companies and sectors.
It's about connecting the dots.
Right. And don't forget about the psychological factors at play too.
Oh, yeah, like how people are feeling.
Exactly. Investor sentiment can have a huge impact on the market. So it's
Yeah.
important to be aware of, the prevailing mood and how that might be influencing those market movements.
So we've got a lot to think about.
We do. We've got the historical trends, the current economic climate, the potential impact of these tariffs, and even, the psychology of the market.
It's like we're trying to solve a mystery. Yeah, except the clues keep changing on us.
It really is like a mystery. And like any good mystery, you need to, pay attention to think critically.
And maybe a little bit of intuition too, right?
For sure. So what are some of those clues we should be looking for to solve this thing?
Well, I'd say keep an eye on things like GDP growth, inflation, unemployment, those economic indicators.
Right. They'll give you a sense of how healthy the economy actually is.
Exactly. And what about earnings reports?
Oh, yeah. Those are key, especially for companies in those sectors that are, likely to be affected by those tariffs.
Okay, so pay attention to earnings and...
Don't forget about investor sentiment.
Oh, right.
Yeah.
How are people feeling about the market?
Exactly. Are they optimistic? Are they freaking out? They can tell you a lot about where things might be headed.
So information is power.
It really is. The more you know, the better decisions you can make.
This deep dive has been amazing. It's given us so much to think about.
Yeah, we've covered a lot of ground.
We talked about those historical trends, the potential impact of these tariffs.
Right, and that whole thing about the market overreacting.
And we even got into specific sectors that might be affected.
It's been a really fascinating discussion, and I hope it's, given everyone listening a good framework for navigating this crazy market.
It definitely has for me. It's a good reminder that sometimes the best approach is to just take a deep breath, do your research, and focus on those long-term goals.
Couldn't agree more. Investing is a marathon, not a sprint, right?
Exactly. There will always be ups and downs, but if you understand the fundamentals and have a solid plan, you'll be in good shape.
Well said.
This has been incredibly insightful. Thank you so much for taking the time to share your expertise with us.
It's been my pleasure. Happy investing, everyone.